The July jobs report just released, and it's good news. Newsnation business contributor Lydia Moynihan with me right now for a breakdown. So, Lydia, the numbers are nearly double what economists predicted. What happened?
Yeah, this was a fabulous jobs report. We were expecting 270 jobs to be added. It turns out it's 528,000, basically double what economists had expected. The unemployment rate has actually lowered this month. We were at 3.6% last month. Now we've dropped down to 3.5%. So we are at levels of unemployment we haven't seen since before the pandemic.
And do the strong jobs numbers for July mean that the Fed possibly might hold off on another rate hike for now?
Well, so what's counterintuitive about all of this, you'd think we have this, blow away jobs reports, but markets are actually sliding on this. Futures are down 200 points following this data coming out. And I think investors had sort of been, in a very counterintuitive way, hopeful that the jobs numbers would be worse, because if we had a bad labor market, that would mean the Fed probably wouldn't raise rates. Well, the fact of the matter is the Fed has been hiking rates the past few months, and clearly that hasn't impacted the jobs numbers at all. So this seems to be giving the Fed a green light to do what they have to do moving forward, even if that means raising rates quite a bit higher. So we could be looking at more of a cool down because, again, this jobs numbers indicates the economy seems to be healthy. So the Fed can continue down that path of hiking interest rates.
All right. Thank you very much, Lydia. Let's bring in Melissa Armo, founder and owner of the stock Swoosh, LLC. You and I have discussed this before. The good news is we're adding jobs. The bad news, there aren't enough people to fill them.
Well, that's true. And even though this number is a fabulous number, the market isn't looking at it that way. The market is concerned that, of course, the Fed is going to continue to raise rates at a record pace. We've raised rates now 1.5% just in the last few months. So that's a lot. And we've got 5 more months left in the year. So the fact is that if the Fed keeps raising rates, eventually it's going to cool off. You have to realize that employment numbers, this employment number, it's a lagging indicator of whether or not we're going into a recession. And some people think that we are in a recession right now. If the Fed keeps raising rates, which they're probably going to do, that's why the market's selling off right now this morning, then eventually businesses are going to lay people off. And that, again, affects the economy. And then the unemployment rate is going to increase. So even though today was a good number, it's really not all roses, because the fact is that, 1, the market's down today, and 2, we could be in for more rate hikes. And that's really not good for any consumer or any business, because, again, businesses borrow, consumers borrow, and they're going to be paying more to borrow.
And you mentioned companies potentially pulling back on hiring. But one thing the jobs report did indicate was a big jump in leisure and hospitality jobs. So obviously that's going to be something we see during the summer months, but is it sustainable as we enter the fall? I know a lot of people are itching to get back to traveling.
Well, it's not sustainable if businesses aren't seeing. The problem is that if consumers stop buying as much, remember, we've had all this stimulus. We've had all the stimulus from COVID. If consumers want to tighten up because they're worried about the future, they're worried about the economy, they're worried about the retirement because it's come off since the highs from earlier this year, people tend to not spend as much. So therefore, then businesses don't sell as many products and goods. And when they don't, then they take care of what's the most expensive thing, which is, of course, payroll and real estate. So all of this already, you're seeing a slowdown. Even here in New York City, you're seeing a slowdown in real estate. There's more listings up right now, and less people are buying because interest rates for mortgages have gone up so much just in the last 2 months.
Futures on the Dow Jones Industrial Average falling over 130 points. The S&P 500 futures were off about 28 points. And then we have this jobs report. Are we somewhat in denial or being deceived at these numbers? Because we're seeing them on paper, but the true facts of what it's like on Main Street are a little bit different. We still see shuttered buildings, businesses that weren't able to make a comeback following the past couple of years, and the fact that there is a lot of uncertainty among people with the rate hikes we've already seen.
Well, I think the one thing, you bring up a good point. The one thing about this number that seems off is because, again, a lot of people are still out of work. You say, well, then how can we be at 3.5% unemployment rate? A lot of people left the workforce. People are still leaving the workforce. They're not coming back. So this is where the number really is skewed. I don't understand how people are paying their bills if they're not working. But the fact is that a lot of people left the workforce in the last 2.5 years. People are still choosing to leave the workforce, and that's a problem. So what if, I mean, you can have an unemployment rate literally like at 0% or something, but because they're not accounting for the fact that people left the workforce and you still have all these job openings. So you see how it's skewed. There's something about it, like you said, that just doesn't add up. Eventually, that's going to come off and reflect in all the numbers. And of course, prices. So the administration can say everything's great, everything's fabulous, everything's wonderful, we're not in a recession. But, you know, fast forward 4 months from now, or even towards the end of the year into the fall, all these numbers are going to reflect what you actually see as a consumer, which is, like you said, you go to the store, there's not enough people waiting on you, or you go to the store and there's nothing on the shelf.
Yeah, Melissa Armo, thank you very much. Thank you for watching. Go to Newsnation.